Hey everybody, welcome back to Drawbridge Finance. My name is Levi Woods, and I thought it would be a good day to show you some of the trades that I placed this last Friday, some of the option trades that I put on. I think it's going to be pretty interesting. As always, you guys know I'm not a professional investor, I don't work in the financial industry, and I am not offering financial advice. But I am a long-time investor, I do a lot of option trading, and this video in particular is going to be about the trades that I put on this last Friday, which is July 6th. What it is I literally am going to show you how many transactions I made, in what companies, what the underlying price was, how much money I collected, and it'll give you some sort of idea of the type of trades that I'm putting on and the probability of profit that I'm going to receive at the end of the trade. So I think it's going to be pretty interesting. Now, of course, I've been thinking about this video for a long time, and what I would love to do is to be able to provide you guys insight into exactly what trades I'm making. And I think that in order to do that, I'm going to have to sort of set up some sort of payment plan so that I'm getting remunerated for that information that I'm providing, because you guys are seeing the trades that I make and based on the research that I've done. And so I've been trying to figure out a way to do this, and I think that the best way for me to do this is through a Patreon account. So I'm going to set one of those up, and I'm going to put a link in the description down below. I'll probably put a link right up here, as always, if you guys want to click on that. And if you'd like to go to my Patreon page and you'd like to become a patron of mine, that would be amazing. You will have insight into the trades that I am making in real time. So when I put on a trade during the day, I'm going to put that up for my Patreon so you can see exactly the trade that I've made on the day that I've made it. And I think that's going to be great, because then people, if they want to follow along for a while, they can just see the type of trades that I'm making, and they can check out the stocks on their own and see the type of money that we can make off of option trading. So I'm pretty excited about that. I've never done this kind of thing before, so it's kind of an outreach to you guys. If you like the content that I'm providing and would love to help support me as a video creator, as an investor, then that would be fantastic. Head over to the Patreon page and sign up to be a patron. Anyways, let's get on to today's video. I'm going to load up my laptop screen here, and we're going to take a look at the actual transactions that I put in on Friday, and I'll give you some kind of approximate numbers of the type of money that I'm looking at transactionally, and also the amount of money that it takes in order to put on these trades. So let's take a look. So these are all of the transactions that I've put on, and so starting at the top of this chart, we'll just go through transaction date. All of these transactions were put on July 6th. The underlying stock that we're selling or buying is going to be an abbreviation, and then the current stock price. Now this will be the price that I actually entered or recorded when I put on the trade. So if we take a look at this first line, we can see July 6th, ABBV was trading at $96.56. Now I like to do these transactions fairly early in the morning, so I usually do them within the first half an hour of the market open. So at that time it was trading at $96.56. And what I did was I sold a strangle. So I sold a call, which is the upper price limit, and I sold a put, which is the lower price limit. And I sold them on a 43 days to expiration. So they're going to expire. If we look at the option description, we'll see that the call that I put on ABBV expires August 17th of 2018. And that call price was $105. I'm going to show you a visual chart of this so you can see kind of what that upper limit represents in accordance to the actual stock. And I sold one contract. So I'm -1, so I've short sold this call. What that means is that I'm going to have to buy it out later, or it will expire worthless. It will only expire worthless if the price of the stock stays below the $105 mark on the expiration date. So it can go up above the 105 prior to that, but at the end of the expiration it has to be below 105. I don't usually ride these contracts to the very end, so I will likely buy it out for less money than I've collected, and then I will keep the difference. So it'll probably make a little bit more sense as we go through this. So the price that I received for that is 73 cents. So that operates per share. So we've got $96 shares. There's one contract, so that's 100 shares. 73 cents times one contract times 100 shares is $73. Now, I'm just putting in approximate numbers here because I know everybody's different. In Canada, I would expect that most people are going to pay an approximate commission on this trade of around $10. In the States, you can get it for much cheaper. So if you are down in the States, you can get these trades for $2 or $3. I, unfortunately, as a Canadian, cannot do that. So I'm putting approximate commission is $10. So the total value that gets deposited into my account today is $63. But that's only part of the trade. I almost always trade these in a pair. So I've got a call at the upper limit and a put at the lower limit. So the put for ABBV is $87.50. So what I want the put to do is I need the stock to stay above $87.50. Again, one contract, so they're equal, and I collected for that 97 cents. The commission is $10, so we've got 97 cents per share times 100 shares, it's $97 minus 10, gives us a total of $87 for the put, $63 for the call, and a total combined for that stock transaction of $150. Now the question is, I'm not actually buying the stock here. I don't own the stock at all. It's just the option that I'm trading. So how much does that cost? Like, how much capital do I have to put aside to actually put on that transaction? And the answer is I have to put on $2,700. And approximately, the platform that I use doesn't actually show me very specific numbers in these things. So because I make these transactions when the market's open, the margin value in my account is constantly changing when I hit refresh, and whenever I put on these trades, I immediately click on the button to see what the new value is, and so I only ever know an approximate value. So I could figure it out. There's quite a few different ways to calculate margin, and every broker does it actually slightly differently. So I would have to either pay for a higher premium package on a monthly basis to see that information, or I can just look at the values and do the quick calculation in the free account that I have. So the bottom line is $2,700 in capital I've put aside. I've collected $150, and that transaction is going to expire on August 17th. I'm either going to buy it out before then, or it's going to expire on August 17th. Which means regardless of time, the total collected, $150, is 5.56% on $2,700. Which means that I could repeat this again if I did it every 43 days, if I did the exact same transaction. At the end of the year, I would have done it approximately 8.48 times. And if they all worked out perfectly, I could return a 47.2% return on investment. So I could turn this $2,700, it would, return around $1,200 return. That is a pretty amazing return, and this is why I love trading options. So let's take a look at this visually, what this looks like. So ABBV, here's the last about 4 months of trading. You can see the stock has been driving down here a little bit, and it's going up, and we've got the 200-day moving average, which is a nice steady slope up, and we've been in a bit of a downturn. So here's the stock on Friday, and it actually had quite a good day, and I sold it earlier in the day, so it was a little bit lower than the close price. At the end of the day, the stock was trading at $96.92. When I actually put on this transaction, it was trading at $96.56, so a little bit lower in this candlestick chart. And the two calls, the call and the put that I've put on, are indicated, the 105 and the 87, are expiring August 17th. So I've kind of left this blank space, gone forward in time, and said, okay, on August 17th, here's my indicators that I've added. So this red box represents that put at $87.50. And the call is right here at $105. This square right here is the $105. So ideally, in an ideal world, what I want this stock to do is stay within this range. So as it goes through whatever the motion is of this stock, I want the stock trajectory to stay below 105 and above 87. And I do this statistically. So I know that there is an 84% chance that it is going to stay below 105, and it's an 84% chance that it's going to stay above 87.50. That's how I do almost all of my trades. So the next trade that I put on was Cisco, and again, we can see it's got a 200-day moving average that is moving upwards, but the stock has been doing quite well recently. It's been well above the 200-day moving average, and we're seeing a fairly flat trajectory. When I put this trade on, it was 42.80. At the end of the day, it was 42.71, so not much variance. But basically, I've got my markers here. I sold a call at $46, and I sold a put at $39, and you can see there's the call at 46, and here's the put at 39. So I just need this stock to stay within that range. What that means is I'm going to collect $104, and it cost me a margin of $2,600. So I have $2,600 earmarked for this transaction, and I collected $104 today in my account. Of course, if this trade goes up outside of this range, I am going to have to manage it. And in fact, I may close it when we're halfway. If I can make more than 50% of the income, the total income, prior to the 50% days wise, like around 20 days, if I've made more than 50% off this trade, I will close it right then. I won't take the added risk, and I will open a new position with that freed up capital. So let's look at the next position. It's going to be an Intel. So at the end of the day, it was 51.37. When I put on this trade, it was at 51.07. I sold a strangle again, so a call at $55 and a put at $46. And you can see there's the 55, here's the 46, and here's the stock right now. So this stock is going to bounce along here and hopefully stay in this range. If it does stay within that range, I will keep this $192, which I collected today. Qs, the same thing. The Qs don't move all that much, so this is the ETF. It's a NASDAQ ETF, and QQQ is the ticker. And I actually bought out a position. That's why this chart has this blank here, but I'll show you that in a minute. But I actually bought out my previous positions and then reopened for August. So I closed my July and then opened for August. Stock is trading $173. My range is 180 to 169. Here's my markers, 180, 169. So this stock is going to bounce along here, and 84% chance that it's going to stay in between those markers. So I collected $772. Quite a lot of margin on this, $13,000 transaction. And next one's Visa. Looking at it, Visa was trading at $133.99. Again, I bought out my previous position for July and I opened an August position. So these all have 43 days to expiration. I'm selling the August 145 call and I'm selling the August 125 put. So I've got a $20 wide range. On that chart, you can see here's the post way up here, $145, $125 on a stock that has a nice trajectory. And if we just continue these lines, they should be aiming right in the center of these goalposts, because I don't care if the stock moves up and down a little bit in that time. All I care about is that the stock stays within this range, 145, 125. Collected $296, $7,000 in margin it took me to buy that position, or to sell that position rather. And then X. Now X, this is actually not a high percentage likelihood trade that I'm going to make maximum profit. This is quite an aggressive trade. I believe that I only have a 64% chance of probability of getting this 40 to 30 strike prices. So I've got the call at $40, I've got the put at 30, both of them sold, so I'm short. And two options, so 200 shares cost me $1,500 in margin to get into the trade, and I collected $270 on this transaction. Almost guaranteed I will be closing this transaction out probably in the next 15 to 20 days. For those people that have chosen to join my Patreon, they will see that when those transactions come out, they'll see exactly the day that I close these transactions. All right, let me go back to this main chart, and then I will just open it up. And so here's a summary of everything. We can see all of the positions that I put on, and this is exactly the type of summary that you would see on the Patreon account. You would see the date the transaction occurred, the stock, and the current price that I put it on, whether it was a buy or a sell, the actual option description, how many positions I put on. Actually, I'm probably not going to include that on the Patreon, but I'll put on the price per share. And that will be enough information for people to follow along and see exactly how much money I'm making or losing on any of these transactions. So let's just quickly skip down to the Qs. You can see that I put on these buy. I bought out these previous positions, so I had 3 contracts for July 20th, and I bought them out for 37 cents and 63 cents. Now, I do this trade almost every single month, and so you can imagine that last month I sold this call for $1.57, and then I'm buying it out for 37 cents. So I made like over $1 on that transaction, and again over $1 on the put transaction. So I'm quite a lot of profit selling the Qs. And again on Visa, same sort of thing. So today I collected 50 cents and $1.08 for next month, and the ones that I collected that money from last month, I'm buying out today, and I bought them out for 5 cents and 55 cents. So these ones, the contract size are the same. I had 2 that I bought of each and 2 that I sold of each, and you can see it cost me $130 to buy them out, and it collected $296. So if everything stays in the same range as I expect it to, then next month the transaction will be similar. I'll have approximately a $300 gain and approximately a negative $130, and I keep the difference, so make about $170 a month on this transaction. So that brings me to how much really am I making. The totals, I spent $160 just in commissions on Friday, but my combined credit into my account on Friday is around $1,334. And it cost me almost $30,000 in margin, so $29,000 in margin, which means that if I let all of these go to expiration, if I didn't touch them at all, between now and August 17th, I would actually collect $31 a day every single day between now and August 17th, including the weekends. So percentage-wise, let's just look at this quickly. We'll do a quick rundown. Maximum return, so I'm making 5% return, 4% return on Cisco, 6% return, and this is in 43 days. So if we calculate this out for the whole year, it works out to a 54% return annually if I just repeated the same transaction 8 times during the year. The Qs, 5.94% return, would return 50%. So let's look at Visa, 4% return, 35% return on the year. Again, I am trading statistical trades, so I expect 84% of the time it's going to work out perfectly. The other 16% of the time, I'm going to manage these trades, and I may even take a small loss, but that's okay because 84% of the time I'm winning. This X, I'm taking a higher risk. I have less percentage chance of winning. I know my percentage chance of winning on it is only about 64%, but my expected return is massive. I'm going to return 18%. I'm going to make $270 on a $1,500 trade. So even if I get out early and only make half of this, I've made like a 9% return in 20 days. And I can do that every single month. And I've been doing this for 4 years. So I'm not just jumping into this willy-nilly. I've been doing this for a long time, and it has returned great results. So the total return on investment, 4.48%, which works out to around a 38% return per year. It is a very reasonable way to consistently make money month after month. You just have to know which stocks to watch, look at the stocks that are trading that have enough premium to collect in the price per share relative to the price that the share is trading at. And then we just rinse and repeat every single month. Anyways, I hope that this video has been informative to you. Remember, options involve risk. I am not offering financial advice. Even with my Patreon, I am just showing you the transactions that I'm putting on. I am not in any way, shape, or form saying you guys should go out and do these types of trades. I'm just showing you what I am doing. And I hope that you can learn a little bit about what I'm doing from this. And let's get rich together. Thanks so much for watching. Talk soon.